You work hard for your money. Day in and day out, you put in the effort, the hours, and the dedication to earn your paycheck. But have you ever wondered if your money could do more than just sit in your bank account? What if it could actually work for you, even while you sleep? But did you know your money can work for you? Yes, that's right. Your money has the potential to grow and multiply, creating more wealth for you over time. This isn't some magic trick or a get-rich-quick scheme. It's a tried and true method that has helped countless people achieve financial freedom. It's true, investing is like giving your money a superhero cape. Just like a superhero, your money can take on challenges and come out stronger. It can fight inflation, grow through compound interest, and even help you achieve your financial goals faster than you ever thought possible. It helps your money grow bigger and stronger over time. Imagine planting a tiny seed and watching it grow into a mighty tree. That's what investing does for your money. It takes your initial investment and with time and the right strategy, turns it into something much more substantial. Imagine this. You put $100 in a special piggy bank. This isn't just any piggy bank. It's a magical one that has the power to grow your money. Over time, that $100 doesn't just sit there. It starts to grow, slowly but surely, becoming more than you initially put in. This isn't any ordinary piggy bank, it's magic. Every dollar you put in has the potential to grow and multiply. It's like having a little financial wizard working for you, turning your savings into a growing treasure. Every year your money grows by itself. Thanks to the power of compound interest, your initial investment earns interest, and then that interest earns interest, and so on. It's like a snowball effect where your money keeps growing and growing year after year. That's what investing can do. It can turn your hard-earned money into a powerful tool for building wealth. By making smart investment choices, you can watch your money grow and work for you, helping you achieve your financial dreams. Investing might seem scary at first, like facing a financial monster. The stock market can be unpredictable, and the idea of risking your money can be daunting. But with the right knowledge and strategy, you can navigate these challenges and come out on top. Don't worry, this guide will equip you with the knowledge to conquer your fears and become an investing superstar. We'll walk you through the basics, help you understand the different types of investments, and show you how to create a strategy that works for you. Ready to become a financial superhero? Let's dive in. With the right tools and knowledge, you can transform your financial future and achieve the wealth and security you've always dreamed of. So, put on your superhero cape and let's get started on this exciting journey. Imagine your favorite pizza, the one with the perfect crust, the right amount of cheese, and your favorite toppings. Now think about how satisfying it is to have a slice of that pizza. When you buy a stock, you're buying a slice of a company, just like you would take a slice of that delicious pizza. Each slice represents a portion of the whole pie, and owning it means you have a stake in the entire pizza. You become a part owner of the company, sharing in its successes and sometimes its challenges. Just like enjoying a slice of pizza with friends, owning a stock can be a rewarding experience. Companies sell these slices called shares to raise money. This capital helps them grow, innovate, and expand their operations. It's like a pizzeria selling slices to fund new recipes or open new locations. As the company grows and sells more pizza, your slice becomes more valuable. The more successful the company, the more your investment is worth. It's like your slice of pizza getting bigger and tastier with every bite. You make money when the pizza company does well. If the company thrives, so does your investment. It's a win-win situation, much like enjoying a delicious pizza and knowing you contributed to its success. But remember, just like pizza toppings, not all stocks are the same. Some are more popular and widely loved, while others might be an acquired taste. It's important to choose wisely. Some companies are like pepperoni. Everyone loves them. These are the big, well-known companies that are often considered safe investments. Others are like anchovies, not so much. These might be smaller, less established companies that carry more risk. They might not be to everyone's taste, but they can still be valuable to the right investor. Choosing the right stocks is key to successful investing. It's like picking the right toppings for your pizza. You want to make sure you get the best combination that suits your taste and investment goals. So, do your research and pick your pizza wisely. Just as you would take the time to choose the perfect pizza, take the time to understand the companies you're investing in. Your financial future will thank you. Let's talk about Apple. They make iPhones, Macs, and more. Back in the day, buying Apple stock was like getting a small slice of a simple apple pie. But guess what? Apple became a tech giant. Their pie became huge and delicious. People who bought early slices saw their money grow massively. That's the power of long-term stock investing. Finding promising companies early can lead to sweet returns. However, remember, not all companies become Apple. Investing in individual stocks requires research and understanding the company's potential. Now let's talk ETFs. ETF stands for Exchange Traded Fund. Think of an ETF as a delicious smoothie. Instead of just one fruit, a smoothie blends many fruits together. An ETF is like that smoothie. It combines different stocks into one package. So instead of buying stock in just one company, you're investing in a whole bunch at once. This is great for diversification. Just like having a variety of fruits is healthy, having a mix of stocks can protect you from risk. ETFs offer a convenient way to invest in a basket of stocks, making them suitable for both beginners and experienced investors. One popular ETF is the S&P 500. Imagine the S&P 500 as a big, powerful wave. This wave represents the overall performance of 500 large companies in the US stock market. When you invest in an S&P 500 ETF, you're riding this wave. As these companies grow, so does your investment. Historically, the S&P 500 has gone up over the long term. It's like riding a wave that generally keeps going higher. However, remember, even big waves have ups and downs. The market can be unpredictable in the short term, so patience is key. Section 6. Stocks versus ETFs. A head-to-head matchup. So, which one is right for you, stocks or ETFs? It's time for a head-to-head matchup. Stocks, potential for high rewards like hitting a home run, but also higher risk, requires research. You need to understand the companies you're investing in, can be time-consuming. Tracking individual stocks takes effort. ETFs, diversification, like a safety net, spreading your risk. Lower risk than individual stocks, smoother ride generally. Easy to manage, just buy and hold. The best choice depends on your risk tolerance, time commitment, and financial goals. Section 7. Baby steps to investing. Start small, dream big. Don't be intimidated by the world of investing. You don't need to be a millionaire to start. Begin with small, manageable amounts. Think of it like planting a seed. Over time, with consistent watering, investing, that seed will grow into a strong tree. Many online platforms allow you to start investing with just a few dollars. These platforms are user-friendly and offer educational resources to guide you. Remember, the most important step is to start. Even small, consistent investments can lead to significant wealth over time. Section 8. Finding your investing groove. ETF or stock. Choosing between ETFs and stocks is like choosing between a relaxing beach vacation and an adventurous mountain climb. Both have their unique appeals and challenges, and the right choice depends on your personal preferences and investment goals. Imagine the beach vacation as a serene, laid-back experience where you can unwind and let the waves take you. On the other hand, the mountain climb represents an exhilarating journey filled with excitement and the potential for great rewards, but also higher risks. If you prefer a more hands-off approach and enjoy the security of diversification, ETFs might be your perfect match. ETFs, or exchange-traded funds, are like a basket of various stocks or bonds, providing you with a diversified portfolio without the need to pick individual stocks. This can be particularly appealing if you don't have the time or inclination to constantly monitor the market. With ETFs, you can invest in a wide range of sectors and asset classes, spreading your risk and potentially smoothing out the ups and downs of the market. They offer a smoother ride and require less monitoring. Think of it as setting your investment on autopilot, allowing you to focus on other aspects of your life while still growing your wealth. ETFs are also known for their lower fees compared to mutual funds, making them a cost-effective option for many investors. Plus, they are traded on exchanges just like individual stocks, providing liquidity and flexibility. If you're up for the challenge, enjoy researching companies, and seek potentially higher returns, diving into the world of individual stocks could be your calling. Investing in individual stocks allows you to handpick companies you believe in and potentially benefit from their growth. This approach requires more time and effort as you'll need to stay informed about market trends, company performance, and economic factors. However, the rewards can be substantial if you make the right choices. It's like being the captain of your own ship, navigating through the market's waves with the potential for significant gains. The key is to assess your risk tolerance, time commitment, and financial goals to determine which investment style aligns best with your personality and aspirations. Are you looking for steady, long-term growth with minimal effort, or are you excited by the prospect of actively managing your investments and potentially achieving higher returns? Understanding your own preferences and financial situation is crucial in making the right choice. Whether you choose ETFs, individual stocks, or a combination of both, the most important thing is to stay informed and make decisions that support your financial well-being. Section 9. Unlocking Financial Freedom. Invest today. Congratulations! You've taken the first step towards becoming a savvy investor. Remember, investing is not about getting rich quick. It's about building long-term wealth and securing your financial future. Whether you choose ETFs, stocks, or a combination of both, the most important thing is to start investing today. The power of compounding will work its magic, helping your money grow exponentially over time. So, take charge of your financial destiny and unlock the door to financial freedom through the incredible power of investing. Start small, stay consistent, and watch your money soar.